Dark cloud cover. As mentioned earlier, dark cloud cover is the opposite of piercing pattern. So it's a bearish reversal pattern where sellers are momentarily in control. The larger it is, the more significant. So let's try to understand how does a dark cloud cover looks like. Dark cloud cover, at first we'll see a green candle followed by a red candle. So you can see there is a green candle and after that a red candle which open gap up and close below the 50% of the body of the previous green candle. So this is a green candle and this is the 50% of the body. After that, see a red candle which open gap up and close below the 50% of the body of the previous green candle. And after that, again we get to see a bearish red candle. So this is a confirmation candle. This is not required. These two candles are mainly required for the dark cloud cover pattern. Green candle followed by a red candle. Red candle should open gap up and close below the 50% of the body of the previous green candle. So let's try to understand how does it look like on chart. Market was on uptrend. Market is going up. Big green candle. Then you can see a red candle open gap up and close below the 50% of the body of the previous green candle. So this will be the 50% of the green candle and it has closed below the 50% of the body, and after that we get to see a trend reversal. Though market was going up, after the dark cloud cover pattern we get to see a change in trend and market started going down. Again, see this market is going up, green candle, then a red candle open gap up, close below the 50% of the body of the previous green candle, and there was a change in trend and market started going down. So this is how a typical dark cloud cover pattern looks like. Hopefully you all have understood how does it work and how does it look like on chart. So see you in next lesson. Thank you so much.